Hey guys, Steve Zelnardo here with Remax West, Zelnardo Associates. We're here on the mic topics on real estate for today, and Chris and Silva are gonna fire away.
Today we have investor-owned homes have reached record levels in Ontario this year.
Terranet reported that the second property owners are a lot higher than the first-time buyers in this market right now. Currently, right now, they're I think 26 to 27%, and then the first-time buyers are under that 25%. Not to mention, like what I was saying in the past, like Terranet's not even calculating totally, because someone like myself that owns multiple properties, I don't even think they record me as owning one property, because I've basically held everything in corporation, so I sheltered them from my personal. Yeah, so that is definitely true, for sure.
Like, what do you think is going to happen with that? Is it going to keep going up, or why did we even get to this level?
Yeah, so right now is that FOMO, the fear of missing out. Like, I got a call literally yesterday from a client. He's like, hey, I want to buy a new property, and like new development basically, right? So new construction, townhouse or something for 1.2 to 1.3 million. I said, why? He says, well, everyone's telling me we should get into real estate. I said, but for what happened to these people or these clients of mine is that they purchased in 2017 new construction, March of 2017, probably like 2 weeks prior to closing. It was a $2.5 million house. Obviously the market started to change at that time and they had a house to sell. And I remember telling them at that point, like, you need to sell your property. Like, the market's changing quickly. You got to sell your assets and then hold tight and then get ready for closing. They didn't believe me. They thought I was, going after an extra commission or something of that nature. And it's the truth, right? And what happened? Market caved, and their property that was worth 1.6 million came down to 1.15 to 1.2 million within the year. So it was a huge adjustment where they committed at locked-in price at 2.5 million, and now their property that was at 1.6 is now 1.2. So they lost $400,000 of their initial down payment. And then fast forward onto closing, naturally they couldn't close the property because when the bank appraised the property, instead of seeing 2.5 million, they were appraising it at 2 million. So yeah, it was very difficult for them to close in this whole theory. So anyway, long story short, and I kind of told them, I said, do you remember what happened last time? Like, you're gonna buy in at the peak, lock in at the peak, and then God forbid you can't close. Like, if you're gonna do an investment property right now, you do it within the fiscal year, a couple months apart. So that's pretty much it. Is it gonna continue on, you're saying? Yeah, I think what's happening is that line of credits, personal line of credits on the houses, there's so much equity in every house currently right now that people are removing it. Removing like $500,000 to $800,000 in equity, sometimes $1 million in equity, and they're going out shopping. At some point when that changes, it's going to be tough, right?
Mm-hmm. Okay, and then the next thing we have here is Remax just put out their 2022 market outlook. Have you had a chance to look at it?
Market outlook?
Yeah.
No, I didn't.
So what they're saying essentially is in Ontario, specifically Toronto and York region, are expected a 10% increase in prices over the next year, and it's just going to be pretty much a seller's market for the whole year.
So Remax is predicting a seller's market next year?
Yeah. With an increase of 10%.
Yeah, if they did only increase 10%, that's nice, right? It's just a nice slight increase, not like what we've seen this year, which is, maybe 10-15% month over month. But I don't know how to take that. I don't know what they're looking at for facts, right? Or what kind of, where they're getting their data for that. I know now, so currently, when was that report, when did they put that report out?
I think today. Today? Yeah.
The only factors that have changed naturally, interest rates are rising. We've seen 60 basis points in the last month and a half to 2 months, or raise on a 5-year fix. Quantitative easing stopped. I mean, this is going to sound redundant because I keep talking about this. So quantitative easing stopped, so the bank's not printing money out and not giving it to the banks. So their liquidity is going to dry up. Banks are in the business of lending money. If they can't lend it out in volume, which they are currently now at these bottom prices, they're going to lend it out at higher rates, naturally, to kind of still make their quota on what they got to do. So I don't know. I would tread lightly. I don't know what they mean by 10% with that, right? So I don't know. I think there's going to be some sort of shift, and obviously the overnight lending rate, they said second quarter of next year they're going to start raising it because the inflation rates doubled since prior to COVID, so we're at 4.7%. I don't know, there's a lot of factors, but all the same, we never would have thought during this global pandemic that we would have had an increase in housing prices. So I could be wrong, but again, I would tread lightly if you're buying real estate. Like I'm in the market now, we just liquidated some assets, but we're putting that money back into real estate. So I'm out shopping too, but I'm going to be smart with what I do. So whatever I buy, it's definitely going to be the best deal in the market. And second of all, it has to cover all expenses. So even if the market did shift and it went down $100,000, $200,000 in value, I don't really care about that because it's going to be long-term investments. And as long as the monthly income covers all the expenses, we're going to hold and then wait for obviously the market to come back up. And obviously, and I'm a prepper by nature, so there's some people that are wild that are buying new construction projects and not even having a deposit down. So there's a lot of those people still doing it. They could be right, I could be right, we don't know. I mean, you have to have your comfort level going forward. But I'm a little bit more conservative. It's chess, not checkers, as I always say. So, yeah.
And the next thing that we have is people are buying strip malls and trying to build on top of that and putting in condominium units for people to live above.
Yeah, where is this?
It's just apparently all over. People are starting to try to do it.
So strip plazas and they're doubling them up?
Strip plazas, yeah. What do you think? Is it even possible from what you've been through?
No, because so just looking at it, an engineering and construction part, those are one-story buildings. You can't double up on that. It's just, I think it's impossible, unless the building can take the strain, but I highly doubt it. I don't know, unless if they're putting residential, maybe that it's light load rather. I don't know, it's just like an engineering part, it'd probably be it's not gonna happen, to be honest, right? Unless they reinforce the building, but it's very costly. I can see the attraction because land's so expensive, so they double up, triple up naturally. Yeah, that makes total sense. I've been saying this for a while, even right when COVID happened, I think in March of 2020, it was basically repurposed office buildings, and they'll be similar to what I invested in Miami, where it's basically a vertical city, where it's like you got a place of worship, it's got a commercial sector, it's got a retail sector, it's got a rental sector, and it's also got an ownership sector. So it's a vertical building, vertical city rather. So yeah, I think that they'll repurpose buildings, but I'm not sure unless they can, like if you look at it, I don't think I would look at it because of that, but also parking, then underground, there's a lot of stuff. Yeah, that makes sense. Because land's expensive, you can double up. It's the whole thing. It's like you buy, for us, on a small scale, you buy a single family home and you make it into a triplex, right? Same amount of land, same one purchase, just some reinvestment into it, and you're looking at the proceeds at the end, like the net positive income. Yeah. I think it's a good idea, but it's just like all these banquet halls. Are they gonna still be mind you, they might still be in business because everything's ending with COVID and stuff like that. But I always thought those would have been big warehouses at some point because they're just empty, vast space, right? Or those could have been repurposed, right? Yeah, because those would have 25-foot ceilings, 30-foot ceilings. So there you can put a floor down the middle, and then have you can create there some sort of units, right?
We're gonna end off with a fun one. A plot of virtual land went for $4.3 million in the Metaverse.
What? 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 They're selling parcels of virtual land? Yeah, I don't know. I'm an elder millennial, so none of that makes sense to me. Maybe he's smart. He can flip it for 4.8. Is this? I don't know. I can't get into this stuff, honestly. It's so tough for me to even look at it. Again, back to those non-fungible tokens. I get it. But I'll buy a tangible item that's non-fungible, like the Porsche or the Alpha, whatever it is, the Vespa. Those are, you can replicate that exact model, right? Thanks for watching, guys. I hope you enjoyed the video. If you liked the video, please like, share, and subscribe, and we'll get you on the next one. Thanks.